Alright, if you can give me just a few minutes, I'm going to show you one of the most effective breakout strategies I've come across lately, built around a powerful tool created by Algo Alpha. Now, you might have seen breakout indicators before, but trust me, you've never used one quite like this, especially with the unique settings and combination I'm about to show you. This video won't waste your time. We'll go over everything quickly, but in detail. By the end, you'll know exactly how to use this indicator and pair it with two powerful tools to create a complete, high-probability breakout strategy that can help you catch amazing moves as they happen. So first things first, open up TradingView. Go to the Indicators tab from here. In the search bar, type Smart Money Breakout Channels and select the one published by Algo Alpha. Once you add it to your trading chart, you'll instantly see colored rectangles appear around areas of sideways price movement. These are consolidation zones. Inside each of these boxes, you'll also see vertical green and red volume bars showing buyer and seller activity during the range. Then, as price breaks out of that box, the indicator plots a triangle to signal the breakout direction. A green triangle means a bullish breakout, and a red triangle means a bearish one. This system is built to highlight those quiet periods in the market where smart money usually enters, before the big move happens. Now let me explain how this works in detail. When price consolidates in a flat, sideways market, the indicator draws a box showing support and resistance boundaries. These levels are essential because they become the breakout zones. Once the price breaks out above the resistance or below the support, the breakout triangle appears. But what makes this tool even more powerful is the built-in volume comparison. Green volume bars mean buying is dominant inside the range, and red bars show selling pressure. So even before the breakout happens, you already have a clue about which side is stronger. That's a big edge. Let's look at a quick example using just this indicator alone. Here, price was moving in a tight range with mostly green volume bars showing up. Then a green triangle appeared right as price broke the upper boundary. That was your go-ahead for a buy entry. You could enter on the candle close and place your stop loss just below the box. Simple, clean, and as we can see, it was a good signal. Now a quick sell example on the other hand looks like this. The price ranged sideways with red volume bars dominating. Then we got a red triangle and a candle close below the support box. You take a sell position with a stop loss just above the box or the breakout candle high. These are basic yet powerful examples using only the main indicator. But now, let's level up the strategy and make it more accurate to reduce false breakouts and get higher probability entries. We'll combine this with two more indicators to make our signals more accurate.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
So first of all, open the Indicators tab from here again and search for Andean Oscillator. Add this indicator to your trading chart. If you have a look at this indicator, it shows three lines, green, red, and orange. First of all, from the settings, you can open from here, disable signal line. We will not need that. So the only thing you need to know quickly about this indicator is when the green line is above the red and expanding, that shows bullish momentum in the market. When the red line is above and pushing away from the green, that's bearish momentum in the market. This is your momentum filter. Now, let's add our final confirmation indicator of this strategy. Open the Indicators tab from here again and add a EMA to your trading chart by searching for Moving Average. Then in the settings, change the length to 200. This will act as your long-term trend filter. Now let me explain how all three work together. For a buy setup, you want price to be above the 200 EMA. Then wait for a green triangle from the Smart Money Breakout Channels indicator, but before you take the trade, make sure the Andean Oscillator confirms it. Green line should be above red line and expanding. That's your high probability confirmation. So then you can enter the trade at the breakout candle close, place stop loss just under the box or the candle low, and aim for at least a 1.5 to 2 risk to reward ratio. For a sell setup, price should be below the 200 EMA, Then you wait for a red triangle to appear. Check that the Andean oscillator shows red line above green and spreading out. If it does, that's your signal. Then you can enter a sell position on the candle close, stop above the box, and target a good risk to reward ratio. Let's walk through a full buy trade example. Here, we can see the market was above the 200 EMA and consolidated for a while. Inside the breakout box, we saw green volume bars stacking up. Buyers were active. Then we got a green breakout triangle as price went above the box. Now we checked the Andean oscillator. Green line is above the red one and widening. That's the final confirmation. So we can open a buy position here. As we can see, the entry was taken at the candle close. Stop loss can be set below the box. And after some time, the price slowly climbed and surged and hit our take profit target cleanly. Now, let's see another buy example quickly. Here we can see the price was still above the 200 EMA and a new consolidation box formed. This time volume was mixed, but the breakout triangle was green. We checked the oscillator again. Green line had just crossed above red and started expanding. That was enough. So we can enter and open a buy position over here. The stop loss can be placed below the candle, and you can set a risk to reward ratio of 2:1 or 1:5. Now let's quickly go through a sell trade examples. In this case, the market was trending down and below the 200 EMA. A range formed, and the volume bars showed red selling pressure. Then came a red triangle. Before entering, we checked the Andean oscillator. Red line was above green line and expanding, so we can open a sell trade here. Entry was taken at the candle close. Stop loss for a sell trade can be set above the box. And after that, let's run the reply and see if the market reacted how we wanted it to. And we can see that the price quickly dropped into profit. Using this triple confirmation method, Smart Money Breakout Channels for structure, Andean oscillator for momentum, and 200 EMA for trend, you filter out the noise and only trade the cleanest, highest quality setups. It's a smart way to avoid false breakouts and stay aligned with the bigger picture. One useful tip is to always look for price action clues at the breakout. If the breakout candle is large and closes near the high for buy trades or low for sell trades, that adds extra strength to the move. Also, don't ignore volume direction inside the box. Green bars before a bullish breakout and red bars before a bearish one give you the extra edge. So to sum it up, test it on your favorite pairs, practice on demo, and always follow your risk management rules. If this helped you out, hit that like button and don't forget to subscribe for more high-quality trading content. Thanks for watching the video. Till the end, I'll see you guys in the next video.